the total stock market ETFs. This is a good, solid foundation that everyone should consider first. Now, the ETFs that I suggest for this category is ticker symbols VTI and VOO. Guys, you are smart enough to invest in the stock market right now. I guarantee it. You really are. But hey, I get it, guys. Investing in the stock market looks and feels and seems like it can be very, very complicated with all the information that's out here about what you should do and what stocks to invest in and what stocks to not invest in, how much you should invest, what types of investments that you really should be going for, right? Which app to use, which brokerage firm to actually place your money at. It can be overwhelming. I totally understand that, guys. And frankly, it can be stressful, right? Watching the stock market go down and watching it go up, right? Not knowing when to buy a stock or when to sell a stock, etc. But hey, guys, I've done some research for you. In this video, I want to make investing a little more simple for you. I want to give you the ability to get some of your time back so you don't have to spend so much time doing so much research on individual stocks. Because when it comes to investing and being good at investing, it takes a considerable amount of research and a lot of work to try to figure out exactly what to do, when to do, and how to do it. So on this video, I'm going to give you my choices of the top 3 ETFs that you can invest your money into and not have to constantly check and research and double check and trade and watch. These ETFs that I'm going to talk about on this video are going to allow for you to invest in them almost to the point of set it and sort of forget it and not have to worry about looking, checking, researching, double checking, right? You always want to know what you have and how it's performing. But otherwise, guys, these are 3 ETFs that have a good, solid track record that you can feel comfortable investing in. Now, guys, there's a few things that I want you to keep in mind when you're investing in these ETFs. First, know your why. And your why is your long-term investment goals. Secondly, you want to develop and write down and have handy your investment plan. What is your strategy? Third, you want to be consistent, right? Dollar cost averaging or putting the same amount of money into the stock market consistently over a long stretch of time at regular intervals, monthly, weekly, every time you get paid, is very, very important. And fourth, understanding exactly what you're investing in so you're well informed. And then, of course, diversifying the things that you invest in so all of your money is not in just a couple of things. And also, you want to keep in mind to not panic when you're investing. You want to avoid the fear factor when you're investing your money in these ETFs, right? And that means knowing what your risk tolerance level is and lowering your risk as much as possible so you feel comfortable with what you're investing in, how much you're investing, and where you're investing your money. Hey guys, if you get value from this video, do me a favor, smash that like button below for me. Also, please consider subscribing to my channel if you're not already a subscriber. And share this video with your friends, your family, your network of good people who want to learn more about ETFs and which ETFs they should consider investing in. Now, let's get back to the video. Now, let's talk specifically about ETFs. ETFs are exchange-traded funds, and they're just a type of investment fund that's traded on the stock market just like individual stocks. Each ETF is just a bucket of individual stocks. Just like a mutual fund or index fund, ETFs, they track an index or a group of stocks, and that group is sitting there in the ETF, which again is like a bucket of stocks. But the difference between ETFs and index funds, mutual funds, is that ETFs are traded daily on the stock market, right? So throughout the day, you can trade and buy ETFs. And so that means that ETFs, their price tends to fluctuate throughout the day. Whereas mutual funds or index funds, which index funds are a type of mutual fund, but those index funds and mutual funds, they're bought and sold based on one price each day, which is their price at the end of the trading day. But they're both just a bucket of stocks. ETFs, just like index funds and mutual funds, they have lower expense ratios and lower fees, so they cost less to own and maintain, which really makes ETFs a very attractive option, especially for new or unseasoned investors. ETFs are wonderful. Now, ETFs are very easy to get into. You can purchase ETFs at any major brokerage firm, Vanguard, Fidelity, Charles Schwab, you name it, you can purchase these ETFs. You just simply have to open up a brokerage account. So guys, now that I've explained exactly what ETFs are, I want to give you the 3 ETFs that I suggest you own. But let me first give you the 3 categories that you need to be choosing ETFs from. The first is total stock market ETFs. The second category is growth ETFs. And the third category is high dividend yield ETFs. So again, for each category, I'm going to give you 2 ETFs to choose from Vanguard's portfolio of funds. But if you invest at Fidelity or Schwab or some other brokerage firm, you can simply locate the equivalent to the fund that I'm going to give you, compare the two, and go from there. Now, hey guys, make sure that you do your own research on all 3 of these categories and all 6 of these ETFs that I'm going to give you, because just a little bit of research will give you more insight on why these categories and why these ETFs that I'm going to give to you are good investments for you. So keep in mind, with those 3 categories of total stock market ETFs, growth ETFs, and high dividend yield ETFs, I suggest you choose one from each of those categories for a total of 3 ETFs. If you pick more than one ETF from the same category, you sometimes run the risk of some overlap, meaning you have the same stocks or same companies represented in all of your different ETF buckets. So here are my choices for ETFs that you need to own from each of the 3 categories. So let's start with the one that I always recommend first and foremost, guys. That's the total stock market ETFs. This is a good, solid foundation that everyone should consider first. Now, the ETFs that I suggest for this category is ticker symbols VTI and VOO. Now, guys, VTI is the Vanguard Total Stock Market ETF. I always look at the risk-reward scale for all of the ETFs that I'm interested in. For VTI, we see that it's 4 out of 5 on the risk-reward scale, and also check the expense ratio. VTI's expense ratio is only 0.03%, very, very low. And also check the 5-year and 10-year returns. But keep it in mind, guys, that past returns are not a guarantee of future performance. VTI's 5-year performance is just over 15%, and their 10-year performance is at 11.44%. Now, also look at what stocks are in the bucket, the holdings or the composition. Now, if you look at VTI, 31% of it is in technology, the technology sector. You see Apple, Microsoft, Amazon. Of course, you see NVIDIA. But again, this is tracking the entire stock market, the total stock market of 3,700 plus companies. And keep in mind now, with VTI, all 3,700 companies in the stock market are not equally represented. Now, the next ETF in this category that I recommend for you guys is VOO. VOO is an ETF that tracks the S&P 500. So with VOO, it's a bucket of stocks, but in that bucket, you only have the top 500 or 506 companies that represent or are in the S&P 500. Now, the risk-reward scale, again, is 4 out of 5 for VOO. The expense ratio, again, is very low at 0.03%, which means your expenses and fees are super low to actually own this ETF. Now, the 5 and 10-year returns, 15.66% and 12%. Nice returns over 10 years, 5 and 10 years. Now, when we look at the holdings, we know that it's the S&P 500 companies. Whatever companies make up that S&P 500, no difference. It's just tracking those companies. Now, when you compare VTI and VOO together, they're very similar in terms of their performance and their returns, right? So there's no need to really, again, have both, because when you have VTI, you essentially have VOO, right? Because those 500 are in VTI as well. Now, next, let's look at the 2 growth ETFs that I suggest and recommend. Guys, growth ETFs are just ETFs whose earnings are expected to be above average relative to the rest of the stock market. So the 2 growth ETFs that I suggest and recommend are VGT and VUG. Now, VGT is just Vanguard's information technology ETF. The risk reward, it's a little higher on VGT. It's a 5 risk rating, so it's a little more riskier, right? Its expense ratio is 0.10%, which means it's a little higher than the other ones we discussed, but it's still relatively low. Now, the 5 and 10-year returns are nice for VGT, almost 25% and almost 20% for 10-year returns. Not a bad return right there, guys. Technology is evolving and it's going to continue to evolve. So an ETF like VGT is not a bad place to be investing. As of this video, it's up 52% year to date. Now keep in mind that it has its ups and its downs, but it's been really up lately, that's for sure. Now, holdings or the portfolio composition of VGT is very, very heavy in the tech sectors, right? Software and software applications and semiconductor companies and tech hardware companies. So again, this bucket is some of your larger tech firms. It includes 320 different companies' stock that's in the bucket called VGT. Now, the second ETF from this category, of growth ETFs that I suggest you consider is VUG, which is just the Vanguard Growth ETF. Its risk reward is a little bit lower at 4 out of 5, which is slightly less than VGT. Now, its expense ratio is also a little lower than VGT at only 0.04%. And you sort of see in the 5 and 10 year returns, right, that you have sort of lower returns with VUG than you have with VGT, while still being very nice returns. The 5-year and 10-year being 19% for the 5-year and roughly 14% for the 10-year return. Not as high as VGT, but again, less riskier than VGT also. Now, in terms of holdings, you got large cap growth companies in VUG. And these companies, again, they have a larger than average expected growth. Technology, again, being the leading sector. 222 companies are in this bucket of stocks called the VUG ETF. Now, if we compare VGT to VUG, we see again lots of similarities in their recent performance. Now, the third ETF category is the high dividend yield ETFs. High dividend yield ETFs are designed to focus their holdings on stocks that gain high yields. So it groups these high dividend yield paying stocks in those ETF buckets, meaning these companies pay a high dividend to its shareholders, and they're very consistent with their dividend payouts. Also, when it comes to dividends, guys, keep this in mind. Anything above a 6% or 7% yield is pretty high. Keep in mind, guys, that dividends are profits that companies pay to shareholders. So when companies are paying 6 and 7% of their profits to shareholders, that's pretty high. And that eats at the company's bottom line, right? Their profits. So a high yield dividend fund is not really sustainable if it's over 6 or 7%. That's not really sustainable over a long stretch of time for a company. A lot of companies use a higher dividend yield to sort of rope people into investing in their firm, right? So when you look at a high dividend yield ETF, consider that. And don't always just jump at the one that's super high, well over 6 and 7%. Now, here are the two high dividend yield ETFs that I recommend or suggest that are super duper solid. VYM and VIG. VYM is just Vanguard's high dividend yield ETF. It's 4 on the risk reward scale. Its expense ratio, fairly low, relatively speaking, at 0.06%. But of course, that's very low over in the big picture of all investments. Its 5 and 10 year returns, almost 11% and about 9% over 10 years. Now, its holdings, VYM has 450 stocks in the bucket, and it's made up of value stocks that pay a good dividend. Value stocks, guys, by the way, are value ETFs, are a little more conservative ETFs, and they're different than the growth ETFs that we talked about earlier, because value ETFs, they may perform better in more volatile stock markets, right? But they won't have this crazy growth. The value ETFs are the ones from companies that are a little more stable. So as we see right here, the yield for this one, VYM, has been about 3.12% or $3.48 per share in the past year, right? And that, of course, is paid quarterly or every 3 months. Now, the second high dividend yield ETF I recommend you consider from Vanguard is VIG. That's just Vanguard's dividend appreciation ETF. Now, the risk reward, it's a 4 on the risk scale. Expense ratio still fairly low, 0.06%, and its 5 and 10 year returns is almost 14% and almost 11%. In its composition is about 314 stocks or companies in that bucket called VIG. Now, these are, again, pretty stable companies, as you can see. They have a long history and a long track record of good, steady, solid performance. And they have a pretty good record of dividend payouts. Now, the yield for this one has been about 1.88% or $3.21 per share in this past year, again, paid out every 3 months or quarterly. Now, again, when you compare the two, VYM and VIG, their performance, but again, not much difference. So there you have it, guys. Those are the 3 ETFs that you can choose from in the 3 different categories that I recommend that really, over time, can make you rich. If you use a different brokerage firm than Vanguard, simply do a little research to find out what ETFs at that brokerage firm are the equivalent of the ETFs that I talked about on this video. Remember, ETFs are just a bucket of stocks, just like index funds. The only difference is that ETFs can be traded throughout the day, so their price fluctuates throughout throughout the day. And hey, I'm a huge fan of ETFs, and I'm also a huge fan of index funds. In fact, if you want to dig a little bit deeper, guys, regarding exactly why I'm a huge fan of index funds, please check out this video right here, where I discuss the pros and the cons of index fund investing. This is a video that you need to check out right now. Peace.